Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, James Anderson from SD Bullion. James, it's great to see you again.
Ivan, good to see you guys. Good to be back on. Thanks for having me.
So, hey, James, you follow the silver market more than most, and the Silver Institute just came out with their metals focus report for global demand. Sort of a review of 2021 and an outlook going forward. And I know you've already taken a look at this. What are the items that really jumped out at you?
Fundamentally, it's pretty bullish in the fact that virtually every sector of silver went up. Now, that's one thing you could say, obviously most sectors went up from 2020 because of COVID. So you could blanket that over it and be cynical in that sense. But what I always look at what I find most important is investment demand, the numbers for that. And the numbers for investment demand were as high as they've been pretty much since the year 2015, which I worked through that year. And that was a peculiar year in the fact that you had all these bulls that kind of came out of the 2011 silver market, and they were still very aggressively buying, even as the spot price was essentially bottoming in the teens. And you had a situation, I think, in 2015 where the spot price, it went down rather low and toward the end of 2015, and there was similar situations with the U.S. Mint not being able to function and not being able to actually deliver any amounts of products. And then all of a sudden there was, when the US Mint is having trouble delivering the Silver Eagle, it basically bleeds on down to products, and you have massive premiums on virtually every product. And that was the case then, maybe not so in terms of scale and percentage as they are now. But in 2015, that did occur for a brief 3 or 4 month spell of time in the second half of the year. And it blew me away in 2015, the amount of ounces that were purchased. And it's mainly because of the fact that the unit price of the product was just cheaper than it had been in 2013 or 2014, 2012. So you had these ardent, hardened bullion buyers who came into that market and were buying based off of value, long-term value proposition. Today is a little bit different. Ever since you guys, the movement has kicked off and the Reddit phenomenon kicked off, you have new blood injected into this market, as well as a lot of the old veterans like myself and other people who've been in this market for that long, kind of waiting to see the culmination and the finishing of all the abuse that's gone on in this monetary system since especially post 2008 financial crisis leading to today. And we can go back further, of course, but that was probably the most important thing to me to see, is that not merely in places like India where people are still buying a good amount of silver, but in North America and in Europe especially as well, the amount of people who are buying it for investment demand and for those reasons as a store of value is extremely high. It's about as high as it's ever been my time in this industry. But there comes a time when physical is hard to find, and that's when you have to go out and actually bid up the spot price. The spot price starts jacking up, and then you get a situation that's sticky because you have more retail investors coming in because they want to get on, their cousin told them about how they're doing great in silver, and it feeds on itself to the upside. And then you also, in the commodities, on the derivative side, which is kind of, this is the biggest nightmare for people who are short. All of a sudden you have momentum traders coming in and turning into like a nickel squeeze, essentially. And anyone short silver just gets squeezed the hell out of. And you're gonna get a situation where the price can go up a wall. I'm not saying that's happening this year, saying it's even happening next year. It is going to probably happen at some point this decade. But I'm guessing, just based on the way that things are being kind of held right now and controlled with the financial industry, the last thing they want to see is silver do a nickel. So it may be a little bit more time, so a little more patience, but the fundamentals that we're seeing here are very, very strong. And the fact that every sector is doing well and growing is a good sign for silver moving forward.
Yeah, what you just mentioned about the U.S. Mint and the American Silver Eagle premiums that are just off the charts crazy. You've seen those same articles I've seen where they're having trouble just acquiring raw silver. They've canceled the Morgan silver dollar this year. They canceled the Peace dollar, a few other products. They're so low on product, so low on acquiring these silver blanks the planchets that they've had to cancel all the secondary products just so they can make it the American Silver Eagle, which is obviously the #1 priority. And even with that, even with canceling all the secondary products, the they still can't make enough American Silver Eagles. So what does that tell you?
The system for distribution in Silver Eagles is pretty small and pretty like in terms of how many people actually get access to it directly from the U.S. Mint, very tiny. And so it creates a squeeze on those premiums going even higher because people need higher premiums when they have low volumes to even keep the overhead. So you get a really situation where it feeds on itself and premiums get more and more wide and the gap gets wider. Silver Eagles are they're the tip of the spear when you look at premiums. 90% silver is a pretty good place to look too.
At SD Bullion, are you guys focused more on the other sovereign mint coins? Are those more in stock and at lower premiums? And which one is the best premium right now at SD Bullion?
Some of the easiest ones to look for the best sovereign deals are South African Krugerrand, silver South African Krugerrand are usually pretty good. Silver Austrian Philharmonics, those are usually a pretty good look if you're looking for a government issued silver coin that has a premium that's in a reasonable size. I mean, Austrian Philharmonics, it's got a euro legal tender, which is kind of nice. The South African Krugerrand silver coin doesn't even have a legal tender. And originally, the gold Krugerrand didn't have a legal tender face value on it because they didn't want people getting confused, which was actually what they should have done always. But most governments put a low face value on it to basically make sure it never competes with their terrible fiat currency.
So James, the other big issue in the news right now is the Fed's talking really, really aggressively about possibly raising 50 basis points at the next Fed meeting. They're talking about aggressively, they're in their words, aggressively selling down the balance sheet. So they're talking about going from being the biggest buyers of government debt to probably the biggest sellers of government debt at the same time. There's a point where the markets just sort of puke on all this, right? There's a point where the housing market just can't take it anymore. Mortgage rates get too high. What are you thinking about all this?
I mean, we're getting there in the housing market. You're seeing signs of it kind of starting to roll a little bit in terms of, I think Redfin came out this past week talking about the amount of homes that are available to sell are getting very high, the numbers, and the amount of cutting of prices down, maybe 12%, I think they were cut down, is a pretty big drop from where they were. I mean, just look at the median price of US homes now. It's almost 380,000 a piece. The average price is over $500,000. And the 30-year mortgage rate just eclipsed 5%. It's been growing at a rate faster than it's been growing, than it grew in terms of mortgage. 30-year mortgage is growing in faster clip than it has since the late 80s. So, you know, to see the stock or to see the housing market roll over this summer and into next, that wouldn't surprise me at all because it's gotten so out of whack. I mean, it's well worse than it was in 2007. And then you have the Fed is jawboning this. I mean, remember in 2018, they raised rates just around 2% and everything went to hell. And they came around and did a pivot. I wonder exactly what it'll be this year. I mean, we have a situation we haven't even talked about, it's something that people really aren't talking about is the close down in Shanghai and what the reasoning for that has been. It's hard to know, what's really going on in terms of, what's the reasoning behind it. Probably the best explanation that I've heard is, the fact that Xi is essentially claims himself a dictator, and that guy's probably getting more and more isolated than ever. I'm sure he's paranoid as hell, and anyone advising him, I guess a lot of the policies are coming directly from Xi, and nobody's checking his policy. Maybe that's like the nice way of saying that they're just being incompetent. I think there's probably some more complexity to this as well going on.
Yeah.
So, if you have a supply chain issue, you thought 2020 was bad, 2021. If Shanghai stays closed for a long time, we're gonna have a real problem in terms of supply of goods and services that people gotten used to buying coming out of China. So it's just something to consider. I mean, this Federal Reserve, they're basically jawboning the market and saying that they're getting serious on inflation, and that's what they're supposed to do. They're paid liars essentially to get up there and do that.
Well, this is
with the debt load, it's just not going to work. So I mean, if they want to cause a recession and do a soft landing, good luck. You have bubbles in virtually every asset class.
Yeah, what you were just saying about soft landing. This was something he just said the other day. Fed Powell, my goal is to get inflation down without a recession. It's like he literally just said this, and I don't know. It's never happened, right? It's never happened.
and you have the IMF out there this week, talking about all these GDP numbers, and they're showing, what every country's GDP. Every GDP is below the real inflation rate. All right, we're going backwards in terms of reality, in terms of real goods and services and production. We haven't been that productive in a long time, and inflation's eating at that. Okay, so any of this claims, it's all masked by technology and fake data. So yeah, I'm not saying that humanity is I'm not a pessimist in the sense of where we're headed. I just think that in the short term, you can't listen to these people. You have to use your own head.
And that leads into the bond market. They're pricing in 8 or 9 rate hikes going forward for the rest of the year. No one's even considering a pivot yet. This is the headline of the Wall Street Journal recently. Worst quarter in decades in the bond market. And this affects auto loans. This affects new home construction. This affects mortgage refis. It affects everything. Credit card rates. With the debt levels we're in, I don't know how we avoid a recession here. I don't see it.
Yeah. I mean, especially when you look at the U.S. consumer. The U.S. consumer is almost 70% of the entire economy in the United States, right? And so where are they at currently? They're like at consumer debt levels now that have been going up, some of the fastest rates in terms of like credit card, the rates of debt getting put on credit cards of late. That's ringing huge alarm bells. That means that the consumer is stretched. They don't have any savings. Like over half of U.S. consumers, they have difficulty coming up with $1,000 extra bucks per month, in terms of a budget. So it's a difficult thing because the majority of Americans are getting hammered by this inflation, and they're being lied to the whole time that the Federal Reserve is in charge, and that they're going to raise rates, and that there's no problem with the economy at all. When you actually go and look at the actual data, alarm bells are ringing, and the recession is either this year or they could string it along maybe next year. But if there's no recession by 2024, I would be amazed.
Yeah, me too.
I would be absolutely amazed. So we might get through this year, but at some point there's going to be a recession, and I think this is going to be the one globally that's going to set off something that we've been waiting for since 2008. It's the other half of this ridiculous situation that we got ourselves into, and it's going to be the doozy of all of them. It's going to take a long time too, probably, to get through it.
Well, I think that's one of the things from 2008. A lot of people think, oh, we recovered. It's like, no, the way they did it was not really a solid. It's more like they delayed the inevitable, right? They used
$29 trillion, injected it into the fiat Federal Reserve. They went out and put it in all these banks that many of them should have been nationalized and gone bankrupt. People should have gone to prison for some of the systematic corruption that was happening, and it didn't. And it was a real bad choice in terms of the United States, at least a few ways, because it just set off this terrible example that we can have a financial coup essentially, and anybody who's deep inside the system can get further rich and break laws, and no problem, go for it. Basically, cash is all that matters. If you're a white collar criminal, go for it, because they're not coming after you at all. So it was a terrible precedent, and it set up this situation we're in now, where you have young people looking up at some of these older generations and very cynical and thinking that some of them are so naive to think that we should change the system to something that we never tried, maybe socialism, something along that lines. They start to get a bit extreme, some of the ideas of what we should be doing, so that it breeds that.
Well, I mean, that was what happened after the Great Depression. Some very extreme, type governments came into power in the wake of the Great Depression.
Sure.
And it wouldn't surprise me if various countries around the planet, I mean, with the food crisis, it's probably coming later this year. With everything going on in Ukraine, with all the fertilizers, I mean, we're going to see some extreme revolts probably over food issues later this year, right?
Well, people remember the Arab Spring. That was in 2011, 2012. What we're going to see probably coming up is going to put that into, it's going to make it look smaller probably in the end, because you're going to hit a situation where the prices in emerging markets for just basic necessities are going to get so high that going out in the street and violently revolting is going to be a better choice in the cost benefit analysis. So you're going to have revolts in a lot of places. My guess is they'll clamp down. There'll be ugly things to see, and hopefully there's not a lot of people who get hurt by it. But I'm concerned as well. The numbers are really bad, and where it could
when
go.
fathers can't feed their children and they're poor and have no other options and they're stressed out of their minds. Yeah, that's when the shit starts hitting the fan, right?
When 40% of your income can't cover the food costs in the house. That's usually about the dollar cost average.
Who was that Max Kaiser, or who had that quote? Because I used that number myself. I've used that quote, and I can't remember who was the originator.
Took it from a study that was done by a white paper somewhere. You could look it up. I mean, but he basically was just quoting it. I mean, it makes sense. If you say you make, X amount per month, if 40% of that is barely covering just the food to keep the baby from crying and the wife, from thinking that you're inept, and then, think about the housing costs and the other things they have to pay for. I mean,
Taxes.
That's what happened in 2011 and a lot of the Arab Spring and all that, and it got heightened and exacerbated by social media. And social media in 2011 was nothing compared to what it is now in 2022.
Oh yeah, I mean, all the live videos Ivan's been posting a lot of videos on our subreddit about everything going on in China. He's got a source where videos are smuggled out of China. He's found. And he's been sharing them on Reddit. We've been tweeting some of them, and they've been some of our most popular tweets with thousands of likes and thousands of retweets, hundreds of thousands of views on Twitter. So Ivan's been the real source of that, finding those videos and getting them out there on Reddit and Twitter. So hat tip to Ivan for his research. He does a lot of that. Just so everyone knows, Ivan's the originator of finding all that
Thank
stuff.
you, Jim.
So anyways, hey, James, thank you for joining us. We really appreciate it, talking about a few hot issues in the news these days. And you know me, I'm going to call you again in a few months.
Sure. Yeah, look forward to it. Anybody who wants to check out our videos at SD Bullion, go to SD Bullion YouTube and come.
Yeah, I'll put a link to your YouTube in the description right below.
Yep, that's where they can find me every Friday typically.
Yep.